John Nadler, is the sell-off in gold a reaction to the fiscal cliff negotiations or not?
Well, Greg, at least in part it has to be because, it appears now that possibly one of the wheels has come off of that cliff bus. On the other hand, we have to look at the fact that when the sell-off occurred, and I call it an accident that was waiting to happen, the fiscal cliff negotiations actually looked fairly promising. So a lot of other assets were actually kind of rallying at the time. This is a combination of factors, and I think principally it's fatigue. Namely that the market was over-dependent on QE, QE, and more QE all year long, and that some of the players have been ignoring the larger downtrend that really commenced after gold made a fresh high last September at above $1,900. So in that sense, coupled with the thin market, the holiday trading patterns, this was not a giant surprise, but it has shaken up a lot of the bulls who are actually looking for, 2K gold by now or higher. So in that sense, it's partially the cliff, partially year-end tax sales, window dressing, what have you, and the thin markets, but mostly fatigue and disappointment.
What about the idea that the U.S. has been seeing some good economic news lately? We've even seen the 10-year rates ticking up. Will this feed into it?
Absolutely, and I think when you look at the patterns among the large trading banks, more than 21 of the primary bond dealers are basically forecasting average rates for the 10-year notes at about 2.25% a year from now, as opposed to what we have now, which is around 1.6, 1.7. So that is factually speaking a result of these amalgam of positive economic metrics coming at us all year. And there's even a school of thought that says that the magic, holy grail number for the Fed of the 6.5% unemployment could actually be hit as early as next year if current trends continue. I'm not subscribing to that theory quite now, but in principle, I look for lower prices. I look for lows somewhere between 1250 and 1450 in gold next year, with a possible high, 18, 1900 still feasible. But overall, I look for the average annual price to decline for the first time in a dozen years.
Thanks a lot, John.